You know, we are living through something truly massive right now, a brand new industrial revolution, and it's all being powered by artificial intelligence. But here's the thing. This historic boom is creating a completely new kind of risk, one that's digital, autonomous, and moving so fast that our old ways of thinking about insurance and security, well, they just can't keep up. Today, we're going to dive deep into how this new wave of AI-driven cyber threats is forcing us to completely redefine what insurance even means, and we'll uncover the companies that are actually set up to do really well in this wild new world.
This quote right here, it really just nails the core of what we're talking about today. When you're up against a risk that is fundamentally out of your hands, could be a hurricane, a market crash, or, a super sophisticated ransomware attack powered by AI, hoping for the best is not a plan. It's not a strategy. The only sane thing to do is to get some form of insurance that actually matches the size of the threat.
All right, so here's our game plan. We'll start with the basics of risk, and then we're going to zero in on why the year 2026 is such a huge turning point for AI and all the new threats that come with it. After that, we'll shift gears to the solutions, rethinking what insurance is through things like financial hedging and a picks and shovels investment strategy. And then we'll wrap it all up with some real, actionable steps for this new reality.
Okay, so let's get started with the fundamentals. Before we can even begin to talk about the specific dangers of AI, we've got to be super clear on the difference between the kinds of risks you can manage and the ones that are so big, so unpredictable, that all you can do is insure against them.
Now, what's really important to see here is this distinction. So you can manage controllable risks, right? You make your operations more efficient, you train your employees. But you can't control a hurricane. You can't single-handedly stop a market-wide panic. These are the kinds of events you absolutely have to insure against because it doesn't matter how well you prepare, you can't prevent them. And this AI revolution, it's unleashing a whole new class of these uncontrollable risks, especially when it comes to cybersecurity.
So while the focus on 2026, what's the big deal about that specific year? Well, it's because it's the year where we see this perfect storm brewing, a convergence of money, technology, and regulation that's going to dramatically open up the field for innovation and for digital attacks. I mean, just look at that number. The amount of money flowing into this space it's just staggering. We're not talking about slow and steady growth here. This is an absolute explosion. Over $2.5 trillion is expected to be spent on AI in 2026 alone. That's a 44% jump from the year before. This isn't just a trend. It's the entire global economy being rewired at a speed that's, frankly, breathtaking. And this chart does a brilliant job of showing where all that money is going. It's not just disappearing into software. We're talking about a colossal physical build-out. Almost $7 trillion for data centers by 2030. Hundreds of billions just for specialized servers and venture capital funding. And think about this. Every single new server, every new data center expands the digital world. And in doing that, it creates a bigger and bigger attack surface for cyber threats.
And right here, this is the heart of it. In 2026, the technology itself just hits its critical mass. Nearly half of all business apps are expected to have what are called agentic capabilities. That means AI that can actually act on its own to do complex stuff. And at the exact same time, you've got the huge AI companies going public, while this messy, conflicting mess of regulations finally kicks in. This mix of mass adoption, market mania, and legal chaos creates the absolute perfect breeding ground for risk.
So this explosive growth and this uncertainty, it naturally leads to new kinds of dangers. And we're not just talking about bigger versions of the old problems. These are fundamentally different. They operate at a scale and a speed that our old security models were just never built for. And that, right there, is why the traditional cybersecurity insurance market is starting to crack.
Think back to the dot-com bubble for a second. It was totally obvious the internet was going to change the world and create massive winners. But what wasn't obvious at all was who those winners would be. You had giants back then, like Cisco, that hit a peak valuation and never got back there. The exact same thing is happening with AI right now. The companies leading today have no guarantee they'll survive the chaos, and the security tools we rely on today could easily be obsolete tomorrow.
Okay, this one right here is one of the biggest new threats, and it's happening from the inside. When your employees use unapproved AI tools just to get their work done faster, they're accidentally creating these secret backdoors into your company's most private data. These systems are running in the shadows, creating huge vulnerabilities for data breaches. It's an absolute nightmare for cybersecurity insurers, because how can you possibly cover a risk that you can't even see? This is really just creative destruction in action. Just like HTTP became the standard for how the web works, there's always a chance that some new protocol, some new security standard could just pop up and make today's multi-billion-dollar cybersecurity industry worthless overnight. It's this constant churning risk that makes betting long-term on any single security product incredibly risky.
The big takeaway here is that these threats are very, very real. We're talking about things like data poisoning, where you mess with the data to make an AI model untrustworthy, or prompt injection, where a hacker uses clever wording to trick an AI into breaking its own safety rules. And in the world of digital assets, we're seeing automated smart contracts getting hacked and hardware wallets being compromised. These are the weapons of a new era of global ransomware, and they make the risk truly uncontrollable.
So that brings us to the solution. You can't just call up your local agent and get a standard policy for these kinds of massive, autonomous risks. The insurance has to be just as advanced as the threat. And because those traditional policies are starting to fail, the market is forcing us to redefine insurance, to move away from a simple piece of paper and toward a strategic financial hedge.
This is really the ultimate question for anyone with money in the game. We know markets crash. We know entire industries can get wiped out by new technology or some systemic cyber attack. So how do you protect your money from that? You need something like a financial fireproof vault.
And that's exactly what hedging is. For decades, smart investors have used tools called options for this exact purpose. It's really no different than car insurance. You pay a small, fixed amount of money, the premium, to protect yourself from a huge, unknown, and potentially life-altering financial loss.
Let's break this down with a real tool. It's called a put option. So imagine you own a stock that's trading at $100, but you're worried it's going to crash. You can buy a put option that gives you the right to sell that stock for, say, $90, no matter how low the price actually goes. You just pay a small fee for that right. Now, if the stock tanks down to $50, your insurance kicks in. You use your option and sell at that guaranteed $90 price, preventing a total disaster. You paid a small, known cost to avoid an unknown, devastating one. It's literally a reinsurance policy for your portfolio.
So how do we take this insurance mindset and apply it directly to this AI-driven cybersecurity storm? Well, if you can't buy a policy off the shelf for this kind of systemic risk, you have to build your own. And you do that by not trying to guess who's going to win the AI arms race. Instead, you invest in the companies that sell the essential picks and shovels to absolutely everyone in the race.
First things first, we have to bust a huge myth. This whole AI revolution feels like it's just digital, right? Just code in the cloud. But the reality is, it runs on a massive, physical, real-world infrastructure. It is a business of atoms. It relies on getting permits for power plants, getting access to water for cooling systems, and specialized networking gear. This physical stuff, this is where the real, long-lasting value is.
And this, right here, just illustrates the strategy perfectly. Instead of trying to bet on which AI model or which cybersecurity startup is going to win, you invest in the stuff they all absolutely need. You invest in the companies making advanced liquid cooling, because without it, their servers will literally melt. You invest in the high-density networking that is the central nervous system for this whole ecosystem. And you invest in the power infrastructure, which is the ultimate bottleneck for all of this. These businesses are hard to get into and are way less volatile. This portfolio becomes your strategic insurance policy against all the chaos of the AI gold rush itself. So we've laid out this new wave of risk, and we've talked about a modern insurance playbook that combines financial hedging with smart infrastructure investing. But what does this all mean for you and your business in the real world? For any business leader out there, the time to prepare is right now. You have to find all the shadow AI running inside your organization. You need to go back and rewrite your vendor contracts to make sure they're on the hook for AI mistakes. You have to prepare for the strictest regulations you can find. That's always the safest bet. And you need to track the real value AI is creating, not just the hype. Think of this as your corporate insurance policy, taking action now to stop a crisis later.
You know, when you boil it all down, our whole idea of what insurance is has to get bigger. It's not just a passive document you stick in a file cabinet anymore. In the age of AI, insurance has to be an active, multi-layered strategy. It's about building a resilient portfolio, owning the essential infrastructure, and putting proactive rules in place before a crisis even has a chance to start.
And that really leaves us with one final, big question to think about. As these autonomous technologies keep getting faster and keep combining in ways we can't even predict yet, what's the next great, uncontrollable risk that's just over the horizon? What's the next threat that we haven't even begun to figure out how to insure against?